Warren Buffett, top subject of today's video. Warren Buffett making some interesting moves out there. Want to talk about this, want to discuss this for a moment here in regards to what Warren Buffett's up to and some perspective on that. Then I want to react to this little 2-minute video clip here. They paid us to just sit there. Former Meta employee on the job required no work. I thought you guys might have heard about this story, but I actually want to hear from the folks in regards to this. This is a pretty extraordinary situation, so I want to watch that with you guys and react to that. And then I spent about the last hour or so on Twitter, and I saw a bunch of interesting stuff that I want to go over and just random stuff that I want to show you guys that I thought was very informational. Let's just put it that way. So appreciate y'all. Much love as always. Thanks for being here, folks. We are now at 25,400 plus subscribers, so I appreciate everybody being subscribed to the channel. If you're looking to apply to join my private stock group, private wealth group, that will be pinned comment down there. Once you join us, we'll send you your membership card, and then once you hit 6 figures in the market, you get your diamond award in the mail. And then once you hit 7 figures plus in the market, we send you the 7-figure club award, put you in the Hall of Fame. So Warren Buffett here says a Japanese trading house exposure upped as flags a geopolitical for cutting the stake in Taiwan Semiconductor, TSMC. Geopolitical tensions played a role in Warren Buffett's decision to cut Berkshire Hathaway's stake in Taiwan Semiconductor. The legendary investor said in an interview today, Berkshire Hathaway cut its stake in the microchip maker by nearly $4 billion in the fourth quarter. China considers Taiwan, I don't even want to get into that whole situation, okay? But nonetheless, there's worries that China could go in Taiwan in the next few years, and that could be a whole situation, okay? So it's interesting that Buffett cut the stake in TSMC because at the end of the day, usually Buffett says he doesn't sell stocks for like a, because of geopolitical pressures and things like that, right? I've heard him say that in interviews many years ago. And so, this is kind of like a perfect Buffett stock. TSMC is like a perfect Buffett stock. Fair trailing PE, forward PE. I don't want to say they have a monopoly on the industry, but gosh, I mean, if you're a semiconductor company, you've got to consider or use TSMC. That's just the bottom line. And they're building facilities in the United States of America. So I'm amazed that he basically sold $4 billion of this company and wanted to get out. And you got to ask yourself, I wonder if he's losing his butt, because he sold in the fourth quarter. So look at the last 6 months of the stock. He was likely selling all into here, and who knows when he stopped selling. I don't know if it was November, December, but ultimately the stock's 89 today, right? And so, I don't know, just an interesting move there from Buffett. I can't wait for him to elaborate more. He's going to be talking on Squawk Box tomorrow, so I'm looking forward to hearing what he has to say in regards to that. But yeah, it seems like a perfect Buffett stock there for him to sell out of as, $4 billion worth is surprising. I understand the whole, but also you got to ask yourself, does Buffett know something maybe we don't in regards to that whole situation? You never know. He's got investments in China. I don't know, maybe. Okay. All right. Next up here, Meta, and then we'll get to a bunch of crazy stuff I saw on a Twitter.
A recruiter at Facebook's Meta in April of last year. She accepted the job, moved to San Francisco to a job where she admits she didn't do much. Her role was eventually one of the over 10,000 job cuts that Meta cut back in November. She joins us now. Britt, I appreciate you telling your story. You made some good money for a short period of time. So no one's, I think, is going to feel terrible about that. But do you feel you kind of got hoodwinked?
Yeah, I definitely feel like I got hoodwinked. And $100,000 sounds like a lot of money.
Not in San Francisco.
When you're laid off, not in San Francisco. And when you're laid off 6 months into that and you made $75,000 the year before, it's starting to look like a pay cut now.
What did they tell you? When you get there, you're all excited. It takes a couple days or weeks to ramp up. We get that. But at some point, you're like, all right.
I'm going to take a wild guess and say 90% of the viewers on this channel watching this right now are thinking, man, how I'd love to make 6 figures to do nothing. That sounds absolutely amazing.
Oh, and then what happened?
Yeah, so I was actually a part of a program, and it doesn't mean much if you only have 6 months of experience, which is the exact reason that myself and other colleagues were so upset. If you're hired into a program and they say that it's going to be 1 year, they tell you that they have even budgeted for this program for the year, and that you're being told every single week, up until the week before layoffs, that your position is not going to be eliminated. It starts to look like something is up. You definitely feel that there is something going on here.
Yeah, I'm sure you've kept in touch with some of your former colleagues right? I'm guessing you have. You haven't just say no.
Did it just hit her? Something might be up. Do you think like everybody in the world just gets paid 6 figures plus a year to just sit there? Welcome to the real world.
Well, then you're wrong. I haven't, but I'm sure you have. What are they saying? I mean, what's the vibe in the tech community in San Francisco and Silicon Valley right now? It can't be good.
So I don't know as far as other companies, but I know that Meta's reputation is really going to suffer from this. Not only did they tell a bunch of people back in November that if they were not laid off, that they would be safe.
No.
Now we're saying that that's not true. No. There's a lot of people that are coming to find out that, hey, maybe my position isn't safe. And that's just causing a lot of instability with the company. I think that the way that they did these layoffs, it definitely could have been done. It could have been better. There was a lot of miscommunication, a lot of confusion. And then after Google announced their severance package, there's been a lot of people that reached out to me that say that they're not happy with what Meta's offered.
Oh, yeah, it sucks. You know, I hate making 6 figures a year to do nothing. Okay, so Meta's reputation. No, if anything, Meta's reputation is going to be a lot better now at this point in time. Think about it this way, right? Think about it this way. Imagine you're an employee who actually works their butt off and you work at Meta. And you make a salary somewhat similar to what that lady made for just sitting there and doing nothing, right? How does that make you feel? I'm pretty sure those people are happy to see the folks that were sitting around doing nothing, making 6 figures plus a year, go bye-bye. Because I can tell you, if I'm working my butt off and then I see Joe over here doing nothing and we're making a similar salary, that doesn't give me comfort. If anything, that's going to frustrate me. And I want to see the company I work for, like, actually have employees that actually work and like do stuff and not just freeloading over here or something like that. And especially if you're a company like Meta, you're going to attract a lot of A players, right? You're going to attract some lower players, and definitely Meta and all the big tech companies hired some, in my opinion, lower grade employees for a bit there. But a company like Meta is going to have a lot of A players. A players don't want to be around C players and D players, or even B players for that matter. That's the bottom line. And also, what is a huge, huge component of employee compensation, especially in the tech world? Stock-based compensation. When a stock price is going down and down and down, as Meta was when it went from $350 to $88, that causes employee morale to be low and people to be de-incentivized to work hard and be frustrated at the company. But I can tell you, when Meta stock's going up and up and up and up and up and up and up because they cut employees, they cut cost, right? They're actually streamlining their organization. They're actually going to build into a profit beast now at this point in time over this next few years, and likely the share price can climb to $300, $400, $500, $600, right? That makes employees very happy because they're sitting around with their stock options making an absolute fortune over the next few years, rather than a situation where their wealth is just going down and down and down. They're working their butts off and they're just okay? So that point is the worst point she could have possibly made. I can understand from somebody from that perspective that you just got fired, right? And you're just wanting to say anything bad, but I can just tell you, like, on a practical level, I can tell you Meta's morale around the employee force is going to be far better over the next few years than it was over the last few years. I guarantee that, baby, okay? That's what I'll say about that, folks. Oh, what a time to be alive. You know, and just to cap off one last thought, okay? One last thought. Let me just say this in regards to that. This is the world normalizing, okay? What we had in 2020, 2021, that was not healthy. People making 6 figures a year to sit around and do nothing was not healthy, okay? We need to get supply and demand in the right place, and especially with companies. That's not a normal world. That should never happen. It happened, and now we move past that era. It will happen probably again someday, but it's not going to happen anytime soon in terms of that, okay? Alrighty, guys, a bunch of stuff here on Twitter I thought was very interesting. First thing is Liz Ann Saunders here. Hedge funds currently sitting on the largest net short positions in S&P 500 futures since late 2011. Now, this is a fascinating chart here. Let me even make this a little bit bigger in regards to this one here, okay? And the reason I want you guys to see this as in-depth as possible is, if you notice, basically every single time, at least in the past decade plus, where you've seen numbers get down this low, it has always signaled a great buying opportunity in the market. I'm not saying this is going to be the same exact, but if you think back to late 2011, oh my gosh, what a great time to be a buyer of stocks. Look at what the stock market did from 2011 through 2014. The move was, a phenomenal move in the market, an amazing move in the market. I was in the market those years. I can tell you I made a lot of money on those years. It was what a time to be alive to be in the market, okay? If we look back to right here, actually, we'll go back to this one, right? Right here, 2015. This is like middle 2015. What a great time to be buyer of stocks. Look at what the market did from about mid 2015 through the end of 2019. It was a good market. There was a lot of money to be made in a lot of stocks, man. In a lot of stocks. They give some amazing returns over that next, let's call it 4 years or so. Great time. If we look at, obviously, March of 2020, yes, another great time to be a buyer of stocks here. You even saw this dip here. This was late 2018. Great time to be a buyer of stocks right there, right? And we saw a number get very, very low recently. This was as of the summer of 2022. Guess what? Great time to be a buyer of the stocks in summer 2022 and into, let's call it late summer 2022. Phenomenal. And recently, we'll see if this one proves to be accurate as well, right? Who knows? Maybe we're going to go on a major bull cycle over the next 3 to 4 years here. I don't know, okay? All I'm going to say is, based upon the past decade plus, every single time period you got one of those, it was actually a great time to be a buyer of stocks. Next one up here, Brian Sullivan tweeted out this: breaking, 1-year-old Whole Foods in downtown San Francisco closing. Too dangerous, they say, for employees. Interesting phenomenon. It's unfortunate you see stuff like this. I've seen a lot of this in some of these cities. I saw a lot around what's going on in Portland recently. I mean, that's a shocking. They were even closing Walmarts. I mean, like, you got to be flipping my flapjacks. That's insane, right? And this is just unfortunate to see this sort of stuff because at the end of the day, this does hold back economic output. I mean, if you're going to have to close a store like that, then that's less employees that have a job, right? That's less potential revenue for a company like Amazon, because if you don't know, Amazon owns Whole Foods nowadays. So to see stuff like that, it's disappointing. I don't know what to say. And if you start getting into political subjects and what cities are run better than others and all that stuff, and I'm not looking to go down that route. It's frustrating and disappointing to see that sort of stuff go on. But it's the time in this day and age we live in at the moment, and it just is what it is, okay? This was interesting. I saw this tweet out here, and I've seen a lot of this around commercial real estate recently in regards to some of these sales of properties at what is seen as very low prices. This was a building that was bought for $35 million in 2001, which is actually a very low amount compared to what $35 million is today. If I were to guess, like, that's 60 mil, 70 mil in today's dollars, probably. Class A, downtown Louisville. Building just sold for $9 million, $24 per square foot. Real estate doesn't always appreciate. And it actually looks like a really nice building. And for being built over 2 decades ago, I have to say it actually looks pretty respectable and like modern and whatnot. Nice building. But it just kind of goes to show you that commercial real estate's in a tough place. Right now. It's in a tough place right now, and just, especially with commercial real estate, a lot of companies, some of them view going back to the office. Others have kind of considered maybe not going back to the office as much or doing part-time. And so it's not a good environment for commercial real estate, and that's where you continue to see weakness. I'm not at all interested in being a commercial real estate investor. I can tell you that. It's never been something that's been on my radar or something that's interested me at all. Tesla, look at this here. Gary Black says, critics say I'm too conservative, but my new Tesla 6-month to 12-month out price target of $350, which, by the way, that's about double the price Tesla stock is right now. So basically, he's expecting the stock to about 2x in the next 6 to 12 months. Would be at the top of 48 Wall Street analysts who officially cover the stock. The current high on New Streets is pure at $320. The average Tesla price target is $210, which is, roughly in line. I mean, that's up, 10%-ish from here or so, 10, 15%. The low is Gordon Johnson at $24. How is Gordon Johnson, $24, Gordon Johnson, how does he get away with this, man? He's been doing this for ever in regards to Tesla, and I just don't understand it. $24? $24? Come on, man. Just stop it. Just stop it, Gordon Johnson. He doesn't have to go full bull. I'm not expecting Gordon Johnson to all of a sudden become the biggest bull in Tesla stock. But anybody that's been covering and watching Tesla and been a shareholder of this company, you're well aware of Gordon Johnson and his ridiculous predictions around Tesla stock's going to collapse. He's been doing this for, 5 years now. But I mean, at some point in time, like, you have to stop being this ridiculous. Like, throw a price target of, I don't know, $70, something like 80, 90. Okay, all right, $24. Like, just stop it, Gordon Johnson. Come on, man. Okay. Next one up here, Charlie. Thank you for tweeting out this. McDonald's is now trading 9 times sales, its highest valuation ever. Now, this is something I called out at the end of last year in regards to McDonald's. I mean, McDonald's is a bubble. I don't know how else to say it. I mean, it's pretty shocking to say that, but McDonald's stock is a bubble. Never thought I would see the day McDonald's stock is a bubble. And two components of this are really interesting, okay? One is really meaningful for the market, and we'll get into that in just a moment. First piece, though, is why not short McDonald's stock? You might say, well, it's trading at really high valuations. Stock price seems like it has to come down. Why not short it? You're going to short McDonald's stock? McDonald's, I don't think I want to do that. I don't want to do that because even if you're in a recessionary scenario, then people like to hide out in McDonald's type stocks. So, to see that stock go down 20, 30, 40% is a possibility, but I'm just not going to try to play that timing game with shorting a stock like McDonald's or buying put options because, yeah, it's trading at, in my opinion, a silly valuation based upon any historical norm, but at the end of the day, you don't know when that stock, if it is going to come down, when it's going to come down. Like, you got to understand, a stock can trade at sillier valuations for an extended period of time. It can do that for 6 months, 12 months, 18 months, 24 months, right? What's Buffett's famous saying around that? Something around shorting, and the market can remain, what is his saying? Oh, it's such a great saying. The market can remain, I don't know. You guys tell me in the comment section. You know what I'm trying to think about. You tell me in the comment section, okay? Second component piece of this is it goes to show you that if we do have a major fall in the indexes, the Dow is likely going to fall, I don't want to say the most, but it could be the most of any index. And the reason being is the Dow is filled up with stocks trading right now at the highest valuations they've ever traded at in terms of a trailing 12-month piece, forward piece, price to sales ratios. And that's why the Dow is just not good. You're not getting good risk reward whatsoever in the Dow. So if we were to see the markets in general fall, let's say in the back half of this year or something like that, right? I'm just telling you, like, the opportunity is not in those Dow stocks because a lot of people already flooded money there. And so I wouldn't be surprised if those ones fell considerably in a situation like that, okay? So, yeah, that's kind of my 2 cents in regards to that. Appreciate everybody joining me as always. Thanks for being subscribed. 25,400 plus subscribers now at this point in time. Thank you all. Also, thank you everybody that supports the channel on Patreon, gets to see all the moves there. And if you're looking to join my private stock group, private wealth group, that will be a pinned comment down there to apply to join my private group. Much love and have a great day.